Hello and welcome to the week ahead. It is Friday, August 15th. Market's been closed for about 20 minutes and I didn't even watch it. Okay, so it's been 2 weeks since I've been here. So I thought it'd be good to come back and sort of recap where we were when I left and what's happened since then. As you can see here, this is the QQQ back. I'm looking back on when I last commented on what was going on. It was on this Friday where we had a big drop after this sucker punch. Sucker punch is a term coined by Charting Man Dan from the Chart Guys at chartguys.com, when sort of out of left field, the Bears give a punch to the Bulls, who have been, almost zombie-like in control for a while, and it sort of dazes the Bulls and sets them back for a bit. But it's just a sucker punch because there's no sustained downtrend from there. So instead what happens is you get a slow, they just get right back to business with this slow, steady rally. And here, look at this, it just went back to all-time highs. So this was not the change I was looking for, where we might get, multiple days down, maybe a daily downtrend. That never happened. Instead, we just went right back to highs. So one of the things you notice on this move back up that I found really useful after the sucker punch was we had the down day Friday, and then on Monday it was up, Tuesday down, Wednesday up, Thursday down, Friday up, Monday down, Tuesday up, Wednesday down, Thursday up, Friday down. So do you notice a pattern? I noticed that pattern early on, and actually if I zoom this out, so this is the sucker punch here on the left, and then I noticed here this pattern emerging, which is essentially a channel, like no big mystery here. As soon as I realized that channel was forming, and it was a channel, it was not a rising wedge, then it gave me a way to anticipate the moves on the day. So for example, I had a really good trading day on this day here, where we'd come into the lows. I knew we were coming into this level of support, and I traded off the lows and basically got risk-free early and had a really solid win that day. And then the next day here on the Friday, we were up at the highs, and I did the exact same thing in reverse, and I got a short on early in the day and played it to the downside. And so nothing groundbreaking or anything like that, but that's sort of the pattern I noticed and what I thought would make sense. But as I was going through the week, I started to notice a couple of things that were occurring that didn't make sense to me. And so I want to talk about that next, and what that means for the week ahead. So starting with NVDA, I noticed that we were getting this pinch. So we had hit this high in the after hours here on Wednesday, the 30th of July at 184. And we pulled back pretty sharply from there. And then ever since then, it was a rally up, and we're basically being supported here by the blue line, which is the daily EMA 12. And then this is resistance above. And once we got here and touched it again, after that, we were basically in this balance, just chopping up and down every single day, which I don't know about you, but I'm not a range trader. I don't do well with that sort of thing. I much prefer a trend to follow that's pushing higher highs and higher lows. And so I kind of just stopped trading NVIDIA and tried to avoid it. For a couple of days here, I actually, near the end, I tried to get long off the lows thinking, this might be the day that it finally breaks through, because essentially what we have here is a flat top rising triangle. And so I thought that typically resolves to the upside. The more times you test that level, the more likely it's going to break. But instead, we broke through the lows today. And as you can see, all of these moves down here, they did not touch this green line, this really oscillating green line, which is hourly oversold, which is a part of this indicator here, RSI grid, which I'm sure I've talked about on this channel before, but it's free on TradingView. You can get it. And all I do is I go in here and I say, I want to see hourly oversold, and it'll show that line there. And so you can see it didn't get it here, didn't get it there, didn't get it there, didn't get it there. Today we finally dipped and we got it. And so, if you look at the daily time frame, what could that mean? Well, here's a daily higher low that touched the blue line daily EMA 12 and also got hourly oversold. Here's the next one, touched the blue line daily higher low and hourly oversold, and now here it's done it again. So this could be just another daily higher low that we just got, and maybe we'll find out Monday if things rally on back to the upside. However, this was just the first little clue that I had that, wait, tech is not as strong as it's been. There was just something about this one with NVIDIA that had me really skeptical, where, for example, here's a nice clean daily higher high, higher low. Then we got a daily higher high, higher low. And then we have not been able to get a daily higher high, and we're coming in for a higher low already. Doesn't feel as bullish to me. And so I'm open to the idea that this could come in for a deeper consolidation. And if NVIDIA and others follow suit and come in for a deeper daily consolidation, that can have a big impact on QQQ, obviously, because semis are a huge part of QQQ. And if that happens, then all of big tech could have a bit of a rollover. And there's all kinds of crazy news going around about them right now that could cause this sort of thing to occur. Doesn't mean that they're going to roll over from here. For example, I could see us doing something like this where we do set this daily higher low. It does come up and then reject and come back down and do something like that. So that's something I'm watching for. If you get a range like this that's built and like a heavy resistance that you can't get through, and then you finally break through it, if you immediately come back down through it, that's a big red alert sign, and you should be paying attention to that, because that's definitely a short signal that I want to be a part of, and I will be watching next week. If we get a rally above 184 that does not sustain and we immediately come back down, I'm looking short, and I want to get short probably pretty heavy, because it's the kind of thing that would catch people off guard, I think. So the next thing I noticed was SPY versus QQQ. So SPY has been showing relative strength to QQQ. So you can see here, as SPY has been pushing higher, QQQ has been pulling in a bit. Part of this could be to do with semis. And if you just take QQQ divided by SPY, if you didn't know you could do this, you can, where you take one symbol and you divide it by another to see which one is relatively stronger. And you can see that in general, QQQ is kind of stronger than SPY until the last few days, where it's been much weaker than SPY overall. And so I noticed that, it's something you got to pay attention to. And I saw it in the way that all of the Mag 7 were trading, where they were not pushing highs like they have been. They're sort of getting a bit choppy, or they'll like push for a really high and then they'll pull all the way back in the next day. Like I saw Microsoft do that a couple times. So that got me thinking about it. And then I also noticed this. So if you look at SPY versus RSP, now RSP is the equal weighted S&P 500. So if you take away the weighting of the stocks that are in it, and you just have a look at what does that look like, then the stocks that are a huge portion of SPY, which help to drive this market, they sort of flatten out. So you say, oh well, the I don't know, let's just say NVDA is a part of SPY. So let's say NVIDIA is equal weighted to something like, I don't know, some other thing that's not as big as NVIDIA. Let's say, is Rivian in there? Anyway, you can imagine like weighting companies that are completely different in scale and the effect that they'll have on the symbol, and then equal them out. So then what you get is a recognition when there's strength coming from the big names versus the small names. So in non-equal weighted SPY here, classic SPY, it's in a steady uptrend with all this stuff. And with RSP, suddenly look what happened. On this day here, while the strong names were sort of balancing, if you equal weight them all, the S&P 500 as a whole was shooting up in a big way. That's something I pay attention to, because it means that the money is not getting pushed into the big names. The money is getting pushed into other names. And so that's kind of a big signal to me. And I was like, wait, why is that happening? Why would that happen? I noticed that tech was sort of chopping and going sideways, but why is it going somewhere else? And where is it going? And that leads me to this, which is IWM. So I wrote this in the Chart Guys community this morning, and I'll just read it here, which is, so I was listening to an analyst, I said analyst, but I'll tell you who it was in a minute, say that big money has been using IWM as a hedge, because IWM has been relatively weaker than the rest of the market. And so with potential rate cuts coming, and I'll show you that in a minute, that could be why we're seeing IWM strengths, because IWM is basically an ETF of small caps, right? Like smaller businesses that would benefit from a rate decrease. So if that happens, then their businesses could really prosper. And so you can imagine that in this sector ETF, where all of these things have been not underperforming, suddenly they're going to get a break from the government. That could mean a big deal to their bottom line. And you could see investors, hedge funds, whatever, starting to think about what are the names down there that are good high performers, and they're going to benefit hugely from a change like a rate change. And so that's why this analyst was starting to look at IWM specifically, but also names within IWM. And I was saying, I actually started looking up, using a little help from ChatGPT, trying to find out what are the strongest names in the small cap space that would benefit from a rate change. And so, because that does make a lot of sense to me, if that's what's going to happen. And you'll notice that on that day that SPY was rallying, look what happened to IWM. It was just moving hard to the upside. So that's pretty bullish. And it got me interested in thinking about IWM and names within IWM. Because if that happens and money is flowing into these small cap names, it has to come out of somewhere else. And where is it mostly overinvested? Well, in big tech. So I'm not saying that's going to happen. I'm not guaranteeing that's going to happen, but the idea does make sense to me. And so it's something that I'm going to be watching out for in the week ahead. And so where did I find that information? I think it's really important you learn this one, which is, I'll put this link in the comments, but this is a live stream that WallStreetJesus did from Steamroom Trading. I trade with these guys every day in their room, and they're awesome. And WallStreetJesus is amazing. I love his take on the market, and he goes through and reads everything you can possibly imagine. And once a week for the public and twice a week for Steamroom members, he goes over all of that stuff to sort of bring you up to speed with what's happening. So I don't actually have to think about that stuff. I just once or twice a week listen to what he says, and I get a good sense for what's going on in the market and how things are shifting and moving. And so that's where I learned about this. I think it's worth checking out if you would like to. And this isn't a paid promotion. I just love this guy, and I love everything he provides, and he gives it to you for free, so it's worth checking out. And then finally, here's the CME Group FedWatch tool, and you can see that a month ago the odds of a rate change were in the 54s, and over the last week to 2 days, it's up in the 80s, 90s. So that's what's driving the thought process that a rate change is coming, and why people might be shifting where they're investing their money. Okay, so what does that mean for the week ahead? Well, for me personally, it means that I'm going to be taking a bit of a step back from the Mag 7 and from QQQ. I'm going to be watching to see if an opportunity arises that is worth taking. But with the choppiness that I've been seeing, I just don't think it's worthwhile for me. So instead, I'm going to be focusing on other names, names that are smaller businesses. And by smaller, I mean huge businesses, but small in terms of like compared to something like NVDA or an Apple. And looking in that space for opportunities that might make sense. And I think, in the meantime, nothing has actually changed here. We did get this dip, but the sucker punch basically just winded us, and now we're back. And so daily EMA 12 is still the guide. Even after this sucker punch, it's still the guide until something changes. I think my expectation is always that the path of least resistance is the path you're already on. And so I expect that we will set a daily high or low. I expect that this rally will continue. If not in QQQ, then in SPY. So I'm going to be watching the QQQ versus SPY. I want to see if things start to change here. If this continues to go further down, it's something that I'm watching for. Get a lower high here and see QQQ lead the way down. But if it does what I think it does, I think that might not happen at all. It might just be something more like SPY continues up because it's still got people buying in other areas of SPY than big tech. QQQ might go into a chop range for a while. And I'm not interested in trading in a chop range. Like I told you in the video earlier, I don't trade ranges. So not interested. But yeah, that's what I'm watching for. I think until it's proven otherwise, daily EMA 12 is the guide. And that's the simple statement. Okay, so that's it for me. Have a great week of trading, and I'll see you next week. Hey, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.